Hey, what's up, guys? Here's today's trade review. What I'm actually going to do today, I'm not going to put it in replay mode. I have all my trades marked out, and I'm just going to explain them to you. Replay mode, I know you guys would like to see the candles move, but replay mode doesn't even show them move how they actually move when the market is open, and then I always end up having to rewind the video, blah blah blah. So this time I'm just going to explain it. You're going to see where my entries were, where my exits were. Okay, so I actually took 4 trades today, 3 wins, 1 loss. Here is the first trade I took in pre-market. So we're actually on the 30-second time frame. I was on the 1 minute and 3 minute. But I was talking to Yermi yesterday and telling him how I switch time frames throughout the day. I don't just stick to one time frame. You can't do that. You have to go through different time frames to see what's really happening and zoom out and get the big picture. Don't stay zoomed in just looking at one section of the chart all day. You gotta zoom in, zoom out, change time frames, and that's how you're going to find these trades. Because I didn't take all my trades on the 30-second today. Okay. But this one I did. Okay. So I called this trade out in the market analysis this morning. And it was way before this happened. So I mentioned to you guys. So going in right now, this is at 8 o'clock in the morning when I took the trade. That is the pre-market New York Open. That is why every morning at 8 o'clock we tend to see a push because that is pre-market open. Okay. So at that time, this was London High right here. So I had that marked out. I mentioned that I could see price going up, sweeping London High, reversing, and coming down to Tokyo High, and then eventually, going down lower. I didn't think this was going to happen in pre-market, but it did, and that was because of news. News came out around this time. They were on the news talking about the war. I think Trump tweeted as well. So that's why we saw this huge dump before the market even opened today. So, anyways, let's get back to my trade. So, like I said, and this is a A plus setup right here. I could have held it because it would have never taken me out of the trade, and I could have got all this, but I didn't. It's pre-market. I have mentioned to you guys before. I like to try to put some money in the bank before the open, so I have a little bit more room to play with, just like a cushion before the open. If I can grab some money, I grab some money. If I can't, I can't. Okay. So I saw London High get swept. And right here, when we were uh, doing all this, trading side to side, and the candles were smaller, that's when I switched to the 30-second time frame. Okay, then we swept London High and left this big 30-second bullish fair value gap. Okay, that green candle is at 8:06. So 8 o'clock is actually down here. So there's actually another setup right here. It came down, it swept these lows, tapped into these lows. There's a bearish fair value gap right there. It inverses it and trades it up. I didn't take that trade. I was waiting for London High to get swept. That's what I wanted. So London High got swept, creates this bullish 30-second fair value gap. We come back down into it. Since I saw these big candles right here, I was comfortable getting in once I saw the body break below this 30-second fair value gap. I was not waiting for a candle closure. If I did, look how far down my entry would have been. And then most likely I would have taken a loss because I probably wouldn't have held all the way up to here for it to run back down. So I entered quick. I was going for Tokyo High. A lot of the times, you guys will see I put my take profit a little bit above buy side liquidity and sell side liquidity because it doesn't always hit that level the first time. And again, that saved me this time. It literally came down, almost got to Tokyo High, took me out of the trade, traded all the way back up to the fair value gap, respected it, and then it dumped. Okay. So another way you can take this trade is you wait for the retest. So the retest was actually the best way to trade this setup this morning. So there's two ways of trading my A plus setup. You wait for the inversion, you enter, or wait for a retest and then you enter. As long as it retests it, respect it, and then you get a move, push back down, right? And that was actually the banger. That would have been a killer trade, right? Okay, so that was the first trade I took. The second trade I took was on the 1 minute time frame. And this is right here. Okay, so so London open or London high then moved to here. Okay, so this is current session London high. Okay, so at the open, right here, this candle with the big wick, this is New York open 930. We trade up, sweep these highs. We don't get to London high. We reverse, leaving a huge wick. So once I see that, I am interested in going short. I even mentioned a little bit before the open that I had a feeling with the news that got put out last night and the huge imbalance in the market that we would see NASDAQ dump today, at least for a little while. And that is exactly what happened. Okay. So I see this huge wick get put in. I'm interested. I'm very interested. Okay. I don't get in, I don't chase price. Okay. It comes down, almost hits London low, but doesn't. But it creates this big 1 minute bearish fair value gap. Price trades back up into it, can't close above it. Okay, cannot close above it, comes back down. We close below this fair value gap, and I entered the trade. I was not worried about the current session London low. Because my bias was we were going to go take out Asia low at some point today. So I marked out that would have been a big, big trade, and I didn't think we were going to get there in one swoop. So I looked to the left, and we have this sell side liquidity level right there. So I marked that out. I put my TP at it, and look at it comes right to it. I was a little bit above it, comes right down, takes me out of the trade. Look at this, trades all the way back up to this fair value gap and then reverses again. So you could have got another entry up here if you missed this entry. Okay, that was the second trade. The third trade I took, same thing. And guys, this model right here is a fair value gap continuation model. Okay, it's nothing I made up. It's been around forever. It's an ICT strategy. ICT traders trade it all the time. Okay. Okay. Next thing, same thing. We get this push down. I'm not going to chase price. It creates a bearish fair value gap. Okay. I didn't wait for the retest. I got in. And at that point, this sell side liquidity level is already taken. Okay. I got in and I got a bad fill because it moved so quick and it bounced on me and I exited. I took a loss on that one. But this I'm going to explain to you right here why I put my level here. Okay. So again, here's Asia lows. It does go down there, but I look to the left and look at this wick at 921, and it lines up with this little consolidation area right there. So this to me, there's support there, right? So I marked out this wick, and you can see I have written on it 921 wick. Okay, so after I got taken out of this trade, I just waited. A couple minutes later, you can see we came up. It's hard to see if I move this over. If I move this over, you can see we wicked the 1 minute fair value gap, bearish fair value gap, respected it. As it came back down, I entered. It went down, did its thing, came back up here to my entry. I still held, and then all of a sudden we flushed to the 921 wick. Bang. And there it is. So, two fair value gap continuation models, and then this one was A plus setup. I should have waited for the retest. Either way, solid day. And look what happens. We then take out Asia low. We respect this big 15-minute fair value gap. As it comes down here, it creates a bearish fair value gap right there. And the beautiful entry was on the 30-second. Look at this. I did post this in Gen Chat right here. Look at this. 30-second bearish fair value gap comes down, respects a 15-minute fair value gap. We come up, we close above this, enter, or if you feel comfortable enough, you can enter as this is trading above the fair value gap. First TP, I would go for these highs. That's where I put it in the chat. And then the second would be up here. And then, this is a long shot to go here. That's like what swing traders would do and hold for all of this. But I'm not a swing trader. I like to get my money and get out of the market. So comes up here, takes you out. That was 80 points right there. If you're good with holding through drawdown and all that, it did come up all the way back up to these highs. And I don't know, what's that, 25, 100? Yeah, so 130 points that would have been, but you would have had to hold through this drawdown and then all that. One way you could have played this too is you could trim at this high, hold some runners, and just let it go. If you play it right, even if you get taken out by this, you'll still make money. So, yeah, guys, so that is the trade review for Wednesday. Crazy day because of the news. The next 10 days are going to be interesting because we have the 10-day ceasefire going on right now. So we really have no clue what's really going to happen, but stay patient, wait for your setups, don't force the trades. If the setup doesn't come, don't trade it. I lost this trade today right here because I was stupid. I chased price on this one. I should have waited for the retest, because by the time, if I would have entered up here, I would have been okay with it. But it pushed down so quick and I chased it. And by the time I hit enter, it entered me all the way down here. That's a terrible fill. So, all right, guys, I hope you have a good day, and we'll do it all over again tomorrow.